all sorts of different types of beginner, newbie investors asking me essentially the same groups of questions. How do I get into this game? What do I look for in a good deal? I'm been searching all these different forums and listening to all the podcasts, and at first it sounds really good and really appealing, but then when I actually look out there in the world, I'm not seeing anything. I'm not seeing any of those good deals that everyone keeps talking about. Um, I just and then if I do see something, how do I tell the difference between a good one and a bad one? Well, today we're going to get into all of that as I go over two deals that just hit my desk this week and talk quite a bit about where they came from, and how do I look at them? How do I decide if it's good or bad? Does it fit into our business model? And then we'll talk a little bit more in detail about basically what my pitch would be to my pool of investors to try to start raising money for these. All right, you ready? Let's rock. Hey everyone, my name is Richard Wayland, owner and broker of the Imagination Brokerage. I am broadcasting to you live from our incredible film studio here in beautiful Santa Ana, California. I've got a few people that are probably going to be joining us on the stream today who are thinking about investing, and then a lot of other people that I know that, maybe you'll get the chance to watch this later that have been asking me lots of questions about, as I said at the top, how do I get started in investing? Well, I can think of no better way to teach you than to just show you exactly what I am doing as I look at a potential opportunity and start judging, is it a good opportunity? Do I take it? Do we pass, etc. So without further ado, let's start getting into it. Our first investment opportunity comes from my business partner. So basically, to some extent, you need to have someone that is local to the community where you want to invest, and someone that you really really trust, who is going around hobnobbing and schmoozing around with all the different potential investors and clients and things like that over on the other side. So Dulce moved to Ohio about 5 years ago. Like, it was kind of during the pandemic, or immediately post pandemic. And she started getting really into the real estate investing community over there. One thing leads to another, and if you're able to keep consistently doing deals, you'll meet all the people that are going to continue to supply you those deals. People like various different types of wholesalers, prominent local landlords who just own lots of little things. One of our newer associates recently was the person who initially sold us our first two properties in our new venture. His whole thing is he is was a former general contractor, and then started teaching construction at a collegiate level, and now basically, as I guess you could say, something of a side hustle, he and his friends take their extra investment money down to foreclosure auctions, and they buy foreclosure properties, and then they do either fix and flip it themselves, or at these days more often they just wholesale them out to other potential investors. Wholesaling, by the way, for those that don't know, just means that you are acquiring a property, not to really fix and flip yourself, but with the aim of selling it to other fix and flippers. And, we were really lucky to get the chance to attend one of these amazing foreclosure auctions just a couple weeks ago. If you look at my video from last week, that would be September 11th. So last week, Thursday, September 11th, I recorded a video getting into the three properties that we successfully got in that foreclosure auction. Three properties for $26,000 total. So, man, yeah, we're feeling pretty excited about that. Lots of interesting opportunities there. So yeah, so check out that video. And in the meantime, now, it's so funny after spending a few months because it was kind of a slow summer trying to find good deals. And now all of a sudden I have two really good ones in front of me. And all right, so let's talk about this one that Dulce found through a personal relationship. All right, we've got, so this is on Durant Street in Durant Avenue in Cleveland. Here she kind of breaks down, what the subject property is. It is approximately 3,000 square feet, built in 1920. It is 2 units, so it's a duplex. Each unit is a 2-bedroom, 1 bath. Dulce then goes on to give us here. Let me zoom in for you so you guys can see a little bit better here. Goes in and shows some of the comps here. And you can see it's a spread of between 130 to 150K. Typically, when we do these flips, or just when we do these renovations, we aim to be pretty close to the top of the market. Just, like I never got into this. I've talked about this in other videos. I never got into this to be a slumlord. I really want to have some of the nicest units on the block. But then also, at least in the east side of Cleveland, and we'll look in the map in a second, on the east side of Cleveland, kind of the optimal strategy is to go for doing affordable housing through the Section 8 program. And all right, so here we go. Let's look. So you see we've got some rental estimates here. Dulce is thinking that we've got, about a little over 1,100 a month. That's consistent with everything that I see and hear from other people as well. Let's see. Yeah, and then, if we were to do this with Section 8 tenants, we might be able to get 1,200 to 1,300. So these are kind of things that we're going to have to continue to think about and assess and reassess as we go through the process. But even if we were to do this for just $1,000 a month, honestly, we would still be quite profitable. So I feel pretty good about this one. But okay, all right. So we are thinking about. So Dulce's in contract right now to buy this property for $75,000. As I look here, it's funny, this property, I don't know, maybe the last time it was sold was, back in 2004. It was so long ago that for whatever reason, it doesn't show up well in other records. So here's this weird True People search website that shows it. Estimated value 82,000. That sounds about right. Last sale date 2004, 4,000 square foot lot. That's what I like to see. 2,600 square foot building. So these are all things that are pretty typical of the area. And one of the things that I want to talk about just a little bit is you see this $82,000 estimated value. Ask, basically how is it so low? Why are we able to get it for even less than that? We're able to get this for $75,000. Like, what's going on here? Basically, a lot of the different potential lenders have raised their minimums that they're able to lend out for even a home renovation loan, or doing even like a what we call a DSCR loan. Their minimums are going up because they're seeing these really low income homes, low price homes, as being too much of a risk. And it's a lot of time, like institutionally from their perspective, it's a lot of time to spend on loans that don't really generate a whole lot of profit for them. So a lot of the lenders have decided to just kind of drop or reduce their volume of these through raising the minimums, increasing the difficulty of being able to get these loans. Well, what happens if your property is worth $82,000, but but no one can actually get a loan for your property? And it needs work. It needs some renovation work. Well, it continues to go down and down and down in value, So right now we're catching this one at 75,000, which isn't, that dramatic of a discount from this. But I mean, considering the fact that, this number is probably based on a lot of the other houses kind of being bought as is, whereas, the after renovated value of this, we expect to be between 150 to 160,000. It's still not a bad deal. It's still pretty good. And you'll hear deal number two we're getting for substantially less than that. So, but we'll get to that in a bit. All right, so let's take a look at the map. So I'm looking here. So here's downtown Cleveland. Here is the east side here. As we zoom in a little bit, so you've heard me talk a lot about East Cleveland over the past couple months because we did a couple deals here. This one is just a little bit more on the Cleveland side. Everything east of about here tends to perform a little bit. It just tends to comp a little bit higher. So this general area here called Glenville, it has just sort of become a really popular area for investors because you can, come in here and do a lot of fix and flips pretty quickly, make a good, chunk of change. And then I feel like for a lot of people, at least the locals here, their whole thing is they want to get out of Glenville as fast as they can. They want to get a couple fix and flips under their belt to build their equity. But then as soon as they can afford to not be fixing and flipping these little homes anymore, they're moving on to the more expensive neighborhoods. Now that's for fixing and flipping. But in terms of being able to hold something for rental value long term, I think that a lot of these flippers are looking at it basically too short term. And that if you look at it with a more of a long-term vision and, take the disproportionately high rent values that are available here, you are able to, maybe more slowly, like not within a year, but over the course of 10 years or 20 years, you're going to end up building much, much, much more equity by using the Burr method. And, this, I would say right here, this whole region is one of the best places in the country to be able to pull off the Burr method. I've got a video on the Burr method. It was one of the first videos posted on this channel, so be sure to take a look at that. But long story short, it's a term coined. I don't know if it's originally from Bigger Pockets, but it's certainly popularized by the Bigger Pockets podcast and their online forum. Buy, renovate, rent, refinance, repeat. Yes, I won't get into it in much detail here, but long story short, Burr is really the secret to how we are going to continue to build more and more and more equity here, build a bigger and bigger portfolio, acting more honestly like a bank than like a real estate investor. So yeah, really interesting strategy. Be sure to watch my video or listen to any one of the zillions of podcasts out there that are talking about the Burr method. But even with kind of an understanding of how that works, it's still really difficult to find these deals. And I'll show you kind of the numbers breakdown in a second. But here, we're talking about cap rates that are in the 10 to 15% range on average, and where our investments are actually exceeding like 12 to 17% cap rate, just because we're buying things that are really dumpy fixers and really boosting them up quite a bit. And with those cap rates, all of a sudden, even with this environment of really high interest rates, we are still generating a bit of a profit every time we do the cash out refi. And we're able to continuously reinvest the money over and over and over again to continue to build our portfolio, build our rental income, and build our cash flow. All right. The next opportunity actually, hang on. So let me get in a little bit more here just to kind of tell you about other things that I might look for as I am trying to decide whether or not I want to invest here. Okay. So let's do, here we go. Let's do the street view. I haven't done the street view yet. All right. So you see here, yep, pretty standard duplex design. We've got a lot of these in Cleveland. You can see that, different cycles of snow, just kind of ice and rain and ice and rain have, caused severe wood damage along here. Roof needs a lot of work. Um, siding probably needs to be encapsulated. If you look, I think a couple of videos ago, I talked a little bit more about what one of the renovation, like what the whole renovation process looks like in terms of the work we need to do. Or look at the tour that we did of our Elm Street property, and you'll kind of see an example. It should be fairly similar. I'm looking around to just kind of take a look at the rest of the neighborhood, see how good of condition everything is. And honestly, I'm seeing it looks pretty nice, right? It's hard to see with Google Street View sometimes, the conditions of the houses, but you can see, the conditions of the lawns pretty clearly. You can see the condition of the cars and the types of cars that are on the street. And overall, I'd say that we are buying the worst house on the block. And that's what I like to see. That's what you want. You want to get the worst house in a pretty nice little neighborhood, because that means that that's where you can add the most value with a smart renovation. All right. So deal number 2 that is on the table right now is this one over here, 3241 East 116th Street. This one, let's see, the Redfin estimate on it is $97,000, and we are in contract on it for $45,000. So this is definitely more of an example, because I was saying before, of how when these things get really difficult to finance, sometimes they sit and sit and sit for a while, and end up getting into worse and worse condition. The owners are not able to get the financing to be able to do the renovation of it, and they're essentially not able to sell it except to somebody who is an all cash investor. And if you're in that situation, there just aren't enough people in this area that have all cash. Well, the value drops. And so here we are able to provide, I guess, the meaningful service of having the cash to be able to buy it, and to be able to do a substantial renovation on it. So it is listed here, public records, 4-bedroom, 1-bath. It's showing right now as a 5-bedroom, 2-bath. So I believe they're counting the converted attic in there, and then they've kind of thrown in another bathroom as well. And we know from our experience that that's kind of the optimal approach in this area. We love to get like 3 or 4 bedroom houses and add at least 1 or 2 bedrooms to it. All right, so that gives you kind of an idea of this one. Here, let's hop into Google Maps for this. There we go. So I wanted to show you. So we're quite a bit south of Glenville here. This is kind of like, this has been Dulce's sweet spot for a while, and for me it's relatively new. I started out doing more upscale stuff over here on this side of Cleveland, and she started out over here, and eventually she persuaded me that over here is the best way to go. All right, so as I was zooming in right away, I started noticing that there's a bunch of really interesting stuff in this neighborhood. Anytime I see an Aldi popping up, I'm very excited. Very, very, very happy to see an Aldi there. They are a great indicator of gentrification. I like to see here. So we'll kind of look at the street view of this house real quick, and now we know, yeah, beautiful, well-maintained street, really nice. People out enjoying the porch, like walking down the street. Yeah, it looks nice. And then we're gonna go south to the main street that we saw. And sometimes I just do this. I just kind of drive around as if I'm there. That's the wonders of modern technology, right? And look at this. Very nicely renovated building. This is, yeah, very nice. Foot and ankle clinic. Good. Good. I like to look at the AutoZone. So AutoZone has a few different trims, like a few different, I don't know what they would call it internally, but basically you got to look at the paint on the AutoZone and see if it's one of their newer signs, these really sharp, crisp, freshly painted colors. Yeah, I really like to see that. That's something where I don't know why, sometimes just over the course of doing this, you learn some of the little weird little tricks of like being able to see because like the behavior of the commercial tenants around where you're investing will tell you a lot about how optimistic they are feeling about is this neighborhood going up or coming down. And so I see an AutoZone that looks like this and I think, oh yeah, AutoZone's feeling good about it. Let's go to, like just kind of one more. Well, actually, where was that Aldi? Did we pass the Aldi? Here. There we go. I want to see this Aldi. Um, okay. Yeah. Yeah, that's fine. Oh, yeah. If you see a little food truck here, that's always nice. All right. I don't clicked on the wrong thing here. Okay. All right. Okay, let me drop this little guy right there. Okay, yeah. Yeah, good condition on that CVS. Aldi looks great. I'm liking the cars in the parking lot here. Yeah. Yep. So that is good. Yeah, like overall, feeling really good about this neighborhood as well. Frankly, I've never, I've never invested in this specific part of Cleveland before, and we did when I went there last month or a couple months ago. We came a little bit south to this area and saw one that we almost invested in, but were kind of outbid on it by somebody that was just willing to pay more, too much more, and we just couldn't justify it. But anyway, yeah. So I like the area. It's definitely worth further exploration, and for $45,000, it's really hard to beat. Really hard to beat. Okay. Let's take a moment and ta-da! Here's where the magic happens. We're going to start to look at some of our pro formas. And this will kind of give you an idea of, I guess, the lens through which I have been looking at the work that we've done so far. So these are the two deals that we did this past year. And these are the two that we're looking in now. And you can see that the numbers are about comparable, I feel like, well, our experiences with these two houses informed our taste on what new projects we wanted to take on. We wanted one that was a little bit easier, something that is just, because Durant is, that's the duplex, the two bedroom units that is in, pretty good shape. And Dulce, who has gone and seen it in person, says that, she feels like if we wanted to, we could do this in 2 weeks and sell it. So, right now we don't have the money to be able to buy that $75,000 all cash. So we are actively raising that money right now. This video is not a solicitation of investment. I am purely just talking to you guys about how I look at investment opportunities and how I analyze them. But if you are interested in learning more about investing, we have all of the legal paperwork for all of that, a formal offering memorandum, and we would need to meet first before we get the chance to before we are allowed to take any investment finances from you. So if you and I are not already friends and you're watching this, then now's a good time to shoot me a message if you're interested in learning more about how to invest, and we can develop that relationship and then able to formally discuss the private placement memorandum. Okay, so yeah, I mean, we are talking with a few different interested parties now and just being able to kind of quickly throw together the $75,000. We have enough money coming in from the refinance of Elm over here that we're going to be able to easily pay for the renovation of both of these houses. But in terms of the immediate acquisition, they just happened to land on my desk within like a week or two before the refinance is scheduled to go through for Elm. So I'm back hitting the streets trying to find some investors on to be able to acquire both of these. We have enough money in the fund right now to just about get this one, the 45K one. We can literally, I think we have about $40,000 in the account right now. So if we just had, I've been kind of asking around saying, hey, if we could get 25K, that gives us some nice cushion and the ability to be able to acquire this without really sweating it. Obviously, if we can get then maybe like another 75K so that we can take down the second one too, that would be ideal. That would be awesome. But yeah, for Durant, we are looking at a $75,000 acquisition, $27,000 renovation, and so total investment of just over 100 grand. ARV 150K. It could be a little bit higher, especially for a duplex, but I like to be conservative with these. Assuming we get a 80% loan. These fees might be a little bit high. They were a little higher a couple years ago, and so I still have these numbers in here just to kind of conservatively guess what our finance costs will be. But they are generally lower than this these days. So our cash out about 105,000, which is just a hair higher than our total costs of everything all in. Now this may I guess if you don't really understand what's happening here, you may be wondering like, wait, 2% profit? That's not good. No, that's 2% profit on an 80% loan. Okay, so there's still 20% of the equity is still in here. That's still value that we created, and it's in the property. It's on our balance sheet. The reason why I have this number here is to basically, as long as this is a positive number, it means that this is essentially infinitely sustainable. We can build the next property and then refinance that, and then the next property and then refinance that, and then the next property and refinance that, and just keep going over and over and over again. Basically, just like we are the bank. We are just constantly just like recycling the same money over and over and over again. And by the end of it, we'll have hopefully dozens and dozens of houses like this. And, it will not have cost us a tremendous amount of upfront capital to do so, because essentially every time we rent one of these out, this rental income is able to comfortably pay for the properties, are able to comfortably pay the mortgage payment on these properties. And, and so we keep doing it. So it's like the renters are paying for the loans, and then the loans are paying for more houses, and kind of everybody wins. We are going into these neighborhoods and really adding a lot of value to these houses that nobody else was able to buy, nobody else was able to afford, and they just sit there derelict. In some cases, actually getting condemned and getting foreclosed on, which on our other side, we just bought a few foreclosed properties that had just been kicked around so much that we ultimately nobody else wanted them. So, we bought a piece of land for $5,000. We bought a 3-bedroom townhome for $10,000 and another 3-bedroom townhome for $11,000. So, all right. Yeah, the rest of these expenses here, I actually don't know if this is correct. Was this right? H12 actual rent. I don't know. I think this number got busted a little bit. But anyway, whatever. So basically the point of these numbers is I'm quickly trying to figure out, is this enough to comfortably pay this mortgage amount? Which, I mean, like, obviously, yeah. Can a $2,200 a month rent cover an $880 mortgage? I mean, yeah. Even after you include property taxes, insurance, management fees, all that stuff like that, and then after paying everything, we're still cash flowing almost $900 a month. Okay, you look at all of these. Yeah, this is the profit, the net cash flow after management expenses, after paying for the insurance and taxes and everything, and after making our mortgage payments. Yeah, I mean, if you haven't been, pardon me, if you haven't been looking around at real estate for a long time, you might not realize that these numbers are absolutely unbelievable. I mean, these are, some of the best returns I've ever seen in my 11 years in the industry. And, and basically I just want to keep doing this as long as I can. Sooner or later, everyone's going to realize how amazing of a deal Cleveland is. And already there's a lot of people that are realizing it. I mean, there's investors from all over the world that are competing with us on buying these houses. But, somehow it just hasn't quite gotten to that point where it's completely blown up. Or maybe we've just sort of gotten our taste refined to the point where, we're able to kind of look at a long list of potential investment opportunities and kind of quickly pick out the ones that actually really make sense for us. And they're usually things that I guess maybe might be too much work, that other kind of newbie investors might not be interested in taking on. Or just kind of in a rougher neighborhood that the other people don't really understand the appeal of. But for us, we really learned to love those little margins, those little areas where everybody else is kind of too scared or too inexperienced to be able to appropriately kind of figure out a good profitable strategy to take on. But anyway, yeah. So this is looking pretty good from my perspective. I am really really excited about these two new opportunities. So I've neglected to mention. So for the second one, this 116th Street, there is a wholesaler out of Texas that texts me deals every single week. And I believe they're getting their deals from kind of mass mailing campaigns and from mass texting campaigns. And in fact, I met them because they sent me a text message asking if I'd like to sell one of my properties in Cleveland. And I said no, but I'm actually in buying mode. I'd be curious to be put on your investor list. And so that's exactly what they did. So the good operators, the smart ones, they are getting text message, like phone number lists for like owners of pretty much every property all across an entire area. If possible, narrowing by the ones that, appear to be professional investors, because maybe it was bought through an LLC, or maybe it was bought all cash. I mean, basically, anytime you see that something was bought all cash, that's a kind of a sure sign that there's an investor involved there. And that is, you send these messages out, and sooner or later, yeah, a lot of stuff is going to get bounced back as spam. I think that these guys, they had to change their phone numbers about 10 times in the time that I've known them, because, yeah, people keep reporting them as spam. And technically they are spam. But yeah, I mean, my thing is, once you own a property, so from the owner's perspective, once you own a property in one of these like high traffic, like high interest areas, now you're put on a list as an owner that might be willing to sell. And I mean, I get text messages, postcards, even like things that appear to be like thoughtful handwritten notes, basically, I mean, at least once a week. Um, and People are constantly pitching and asking me like, hey, can I buy your property? And so, and I always respond back. I say, no, but I'm interested in buying, so put me on your investor list. And so that's how, for me, how I've started getting more and more of these wholesaler leads for deals, mainly because, yeah, I engage with spam. And then, I ask them a lot of questions to try to make sure, see if they sound legit, if they really know what they're talking about. I always, double check, what title company they're working with, and what other history I'm able to kind of see publicly of what they're doing. And yeah, so far, I've got kind of a small handful of wholesalers that I actually really like and keep in touch with on a regular basis. Not to mention people who, are actively raising money for other deals that I'm able to kind of learn from them, learn about their investment opportunities, what their business model is. And, it's a small community at the end of the day of people who are actually really serious about this, and, producing good content about it, and able to provide a lot of meaningful educational value on it. And, the reason why I am so transparent about my whole process and all the different things I'm doing is because so many people before me were incredibly helpful and generous and gracious with their time in teaching me all the methods on how to do this. So I have been just, very, very blessed. I'm very grateful for the opportunity to get to invest in real estate. I know it's something that a lot of people dream of doing, and I don't want to squander the good luck and the good kindness that's been shown to me. I want to pass on the knowledge to those of you that want to be like me, become a broker, or become an investor. And I also want to, for those of you that want to invest but don't want to spend all that time developing a whole new career, we created a fully structured and licensed real estate syndication with a formal private placement memorandum and everything, to be able to provide a safe way for people to invest in the deals that we're talking about. And, I try to keep it very, very, very simple. Our structure is just a 70-30 split. So the management, that's me and my partner Dulce, we get 30%, and the other 70% goes to the cash investors, and that is it. There's no other intricacy to it. There's no waterfall structure. There's no preferential return structure. There's nothing. It is just a very, 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 it's almost like, it's almost dumb how simple it was. It's like I had that conversation with the lawyer where it's like, all right, explain it to me like I'm 5, because I want to have a deal that is extremely easy to explain to other people, and one where I'm not going to have to sit around and stress out about, oh, am I providing enough for this, or am I doing enough for that, or am I, whatever. No, 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 none of that. Okay. The reason why it's just a straight up percentage split is because we sink or we swim together. And I don't want there to ever be a feeling of, oh, wait a second, like, why is that guy making so much money and I'm over here and like all that. Like, I don't want to deal with those types of conversations of like, well, why is this manager being paid a set salary, whether or not each individual project is profitable. Why is this, why are these investors getting preferential treatment? No, there's just, two classes of ownership, just GPs and LPs, general partners and limited partners. And it's just a constant, 70-30 split, or 30-70 split. And yeah, that's it. And again, this is not a solicitation for investment. I am not telling you that so that you invest. I'm teaching you that is, after looking at a bunch of different structures of how to put together a syndication, that's the one that I chose that worked best for me. And I will say, what I can do is I can say that I am also willing to kind of sell that service to you. I figured out a very streamlined path for creating these syndications. And so if you have dreamed of putting together your own real estate syndication, raising money with your friends and family, and having something where you have the guidance of a consultant like me to be able to help arrange things or help broker transactions, but ultimately you don't want to have to mix your voting rights and your returns and all that stuff like that with a bunch of other people you don't know. I completely understand that. And I think that it is something where, now that I've gone through it and realized, oh, it's actually not that difficult or expensive, at least not in Ohio, with the Ohio legal fees and Ohio, costs of everything. I'd say that for between about $100,000 to $200,000, anyone can do exactly what I did. And then, a year or two from now, I'll be sitting in this chair talking about what a incredible adventure it's been to go through that whole process, getting to become a professional real estate investor. All right, so I think that's about enough babbling for me. I was kind of looking to see if I'd get any messages in the chat. I will double check my phone real quick. No. Okay. All right. So yeah, I think at least the specific people that might have more questions on this, you guys feel free to text those questions to me, send them to me in a private message wherever you're seeing this, and put it on in a comment down below, and I will answer it at next week's live stream. I'm starting to do these live streams, these live Q&As every single Thursday from 4:30 p.m. to 5:30 p.m. Approximately, maybe 5:15. And I've been really, really excited to kind of see some of the new interactions, some of the new followers and subscribers that we've been getting. If you haven't already, please do like, follow, and subscribe. And if you're interested in investing in Ohio, send me a message. If you're interested in buying, selling, or investing in Southern California, that is our bread and butter here at the Imagination Brokerage. We're absolutely happy to help you with that as well. Thank you so much for joining me. And as we talked a little bit about where I get my deals from, how I assess what a good deal is versus a bad deal, and if it fits our overall strategy, a little bit about what that strategy is, and then talked about the overall structure of our investment syndication, and kind of the opportunities that are immediately available for this syndication. So anyway, thank you so much for joining me. Again, my name is Richard Wayland, owner and broker of the Imagination Brokerage. You can find us at imaginationbroker.com. Thank you.